Your VA home loan benefit is not a free house, and if you use it wrong, it can trap you in debt and cost you tens of thousands of dollars. Most veterans never hear the downside until it's too late, and I've watched people get stuck in negative equity, lose bidding wars, or get blindsided by VA appraisal issues they never saw coming. So, before you jump into a VA loan thinking it's automatically your best option, you need to hear the honest truth about how this program really works in the real world. I'm Joe Nelson, 21-year Air Force veteran, one of Kansas City's top producing realtors, and a fully licensed mortgage professional. That combo's rare. It means I'm not speaking from one side of the transaction to the other. I see both the loan side and the real estate strategy side, and I've personally used the VA loan myself. So when I say there are situations where the VA loan might not be the smartest move, I'm saying it from lived experience, not from a sales script. And if any part of this hits home for your situation, call or text me. My number's in the description, and I'll walk you through your options one-on-one. Buying with zero down. You might be starting your homeownership journey in the red, literally. The first trap with VA loans is this. With zero down plus the VA funding fee, you can start homeownership upside down on day one. Most VA buyers are borrowing 100% of the purchase price, and then if you don't have a disability rating, the VA adds a funding fee that often gets rolled into the loan that can be around 2 to 3% of the price, sometimes more on subsequent uses. So you might buy a $400,000 home and walk away with a loan closer to $410,000 or $415,000. That means if you had to sell in the first couple of years, maybe the military moves you, life happens, divorce, job change, whatever, you could owe more than the home is worth after closing costs and agent commissions. You're depending on the market to go up just to get you back to zero. Now, if you do get moved, you do have options, you're not automatically stuck. One solid strategy is keeping the home as a rental. One of the quiet superpowers of the VA loan is that with most competitive VA interest rates and no monthly PMI, your total payment is often low enough that you can rent the property out and either break even or even cash flow each month, depending on taxes and insurance and the local rental market, of course. I've seen plenty of veterans get relocated and turn that oops, we have to move kind of moment into the start of a rental portfolio. That only works if we bought the right house at the right price in the area with real rental demand. That's where planning ahead really matters. As a rule of thumb, if you're not confident you'll be in the home at least 3 to 5 years, a zero down VA loan might not be your smartest play unless we've run out the numbers on renting it out down the road. If you're staring at a possible PCS orders or you just not sure on your timeline, reach out to me before you sign anything, call or text, and we'll run the math on how long it takes you to break even and whether keeping it as a future rental actually makes sense for you. They say VA has no PMI, but what if I told you you're still paying for it? The second thing nobody explains clearly enough is that no PMI does not mean no extra cost. You're just paying it differently with the VA funding fee. With conventional and FHA loans, you see private mortgage insurance or mortgage insurance premium as a monthly line item. With VA, the sales pitch is no PMI, and that sounds incredible, but the VA funding fee is basically like prepaying a chunk of insurance up front and then financing it for 30 years. Here's an important detail a lot of people miss. With a VA disability rating of at least 10%, though, that funding fee is completely waived every time you use your benefit. That's huge. And in those cases, VA can be an absolute home run because you're getting the zero down flexibility without the extra built-in cost. If you don't have a disability rating, that funding fee is very real, but it can be reduced if you put some money down. The more you put down, the lower the funding fee percentage. What it doesn't do is eliminate the fee altogether, though. Unless you've got that qualifying disability rating, you're always going to have some sort of funding fee on a VA loan, so even with 5 or 10% down. So in a lot of scenarios, the choice you're making is, do I want to roll this several $1,000s fee into my loan or pay interest on it for 30 years? Or would I be better off using a different loan type with a smaller or no upfront costs? Yes, if you have a VA disability rating, your VA loan can be absolutely fantastic, but if you don't, that funding fee can add thousands, even tens of thousands to your total cost over the life of the loan. There are situations where if you put a solid down payment down, a conventional loan with no funding fee might actually be cheaper over time than a 0% down VA with a big fee rolled in. So don't just assume VA is automatically best because of the no PMI line. If you want me to compare VA versus conventional or FHA for your budget, credit, and how long you plan to keep the home, shoot me a text and I'll run a side-by-side number so you can see which option actually serves your family, not just the marketing. Think all appraisals are the same? VA appraisals play by their own rule book. The third landmine is the VA appraisal. It plays by its own rules, and we have almost zero control over it. With conventional and FHA loans, the lender orders an appraisal through an appraisal management company that we work with. And while we still can't pick the exact appraiser, there's usually a larger panel and a little more flexibility in timelines and expectations. With VA, appraisals are ordered through a VA portal, and the VA assigns the appraiser, period. All appraisers, whether it's VA, FHA, or conventional, are looking at two big things: value, condition. They're all trying to answer, what is the home worth, and is it in acceptable shape for this type of financing? The difference is how strict they are and how they interpret the guidelines based on the loan type. On the value side, I've seen VA appraisals come in more conservative than conventional in the same area. Recently, I had a VA appraiser who refused to give more than $10,000 in value for a 2-car detached shop with electrical, concrete floors, insulation, HVAC, and its own separate 2-car wide driveway. And the house already had a 2-car attached garage. For this veteran, that detached shop was a dream come true. A workshop, storage, hobby space, all of it. The appraiser just wouldn't budge, and that made the numbers a lot tighter for my buyer. On condition, VA appraisers are laser focused on safety and livability. Peeling paint, missing handrails, old roofs, exposed wirings, things that might slide by on a conventional loan can become deal killers on VA. There's a process called Tidewater, though, where the appraiser basically says, hey, I think this might come in low, and it gives your realtor a chance to provide additional comparable sales to support the value. In theory, that's great. In practice, I've rarely seen it move the needle. Timelines can also drag. I've had closings pushed because we were just sitting around waiting on a VA appraiser who moves at their own pace. The key here is having a lender and a realtor who truly understand VA guidelines, value trends, and property conditions so we can spot potential problems before you fall in love with the house. And if you're thinking about using your VA entitlement, text or call me first so we can talk strategy around appraisals, property types, and how to protect you before you write your offer. Some sellers see VA loan on your offer and immediately bump you down the list. The fourth thing that nobody wants to say out loud is that multiple offer situations, especially, some sellers and listing agents see VA loan and quietly move your offer away from the table, even if you're a very strong buyer. It's not fair, but it's reality. A lot of agents simply don't understand VA loans, so they assume VA equals hard to close, picky appraisal, more repairs, more drama. And when a seller has multiple offers on the table, they're looking for the path of least resistance. If an agent has had one bad experience with the VA appraisal, or worse, if they've just heard stories, they may push their seller toward a conventional buyer, even if the VA buyer is just as qualified. I've seen VA buyers lose bidding wars even though they had a very low debt-to-income ratio, perfect credit, and strong overall qualifications, purely because the listing agent didn't want to deal with a VA appraisal. And that's exactly why we sometimes have to structure a VA offer differently. In certain situations, adding a small appraisal gap, even $2,500 or $5,000, can instantly put a seller's mind at ease. It shows you're confident in the value, you're committed to the home, and you're not expecting the seller to reduce the price if the VA appraiser comes in light. A lot of listing agents don't know you can write appraisal gap coverage into a VA offer, so when we do it correctly, it immediately removes one of their biggest objections. This is where having a VA literate agent and a lending team who can communicate strength makes all the difference. Sometimes it means structuring the offer with smart terms like a gap. Sometimes it means showing reserves or tightening up timelines. And sometimes it's literally just me picking up the phone and explaining to the listing agent that we're already pre-underwritten, or that we know the guidelines, or that we know how to navigate a VA appraisal, and we're gonna make their life easy. When the other side hears confidence instead of confusion, your VA financing becomes a non-issue, and in some cases even a positive if the seller wants to support a veteran. And if you're planning to house hunt with a VA loan in a competitive market like certain parts and price points of Kansas City, do not roll the dice with an agent who treats VA offers like every other loan type. Reach out to me, call or text, and my team will help you build an offer strategy that makes your VA loan a strength instead of a handicap. Just because you can use your VA loan doesn't mean you always should. The fifth reality check is that your VA loan is a powerful tool, but it's not a one-size-fits-all solution for every property or every season of life. VA loans are designed for primary residence, not pure investment properties or most short-term rentals. You can eventually turn a VA financed home into a rental, but the VA does require genuine intent to occupy the home as your primary residence. Typically, you need to live in the property about a year before converting it to a rental, unless there's a legitimate change in circumstances like PCS orders, deployment, or major changes in family needs. So while VA can absolutely be part of a long-term wealth plan, it has to be used in the right order with the right expectations. If your long-term goal is building a rental portfolio or stacking properties, the smartest move might be using VA on the right home first, then shifting to conventional loans for future investments. And here's something most veterans don't know. You can sometimes have more than one VA loan at the same time. It all depends on your remaining entitlement. When you buy your first home with a VA loan, you don't use up your benefit forever. You use up a portion of your entitlement. If you have enough entitlement left over and the numbers pencil out, you may be able to purchase a second VA loan property. Again, as a primary residence though, while holding on to the first one as a rental. Eligibility for a second VA loan is determined by two main factors. One, your remaining VA entitlement. This is the dollar amount the VA guarantees on your behalf. And if you haven't used all of it, or if the loan amount you need fits within what's left, you might qualify for another purchase. And second, the loan limits in the area you're buying, because the amount of remaining entitlement you need is tied to county loan limits. And if you're buying in a high cost area, you need more entitlement available than if you're buying in a standard cost area. A lot of veterans think, I used my VA loan once, so now I have to go conventional forever. And that's just not true. But the catch is that repeat use of your VA benefit when your disability rating doesn't waive the funding fee comes with a higher funding fee, which affects your long-term cost. So sometimes even a second VA loan is possible. It might not be the smartest move if your real goal is minimizing lifetime cost or ramping up investments. This is why the VA loan has to be used strategically, not emotionally. Just because the VA lets you buy with zero down doesn't mean that's your best choice for your money, your timeline, and your bigger financial plan. If you want to use your VA benefit to build wealth, we need to plan out which loan to use first, where you're buying, how long you're staying, and what you want the property to become later, home, rental, or a stepping stone. And if you want help figuring out the right order for your first VA home or your second or your third, call or text me. We'll build a long-term strategy together. The VA loan is powerful, but only when you use it intentionally. So here's the bottom line. The VA loan is an amazing benefit when it's used with a smart strategy and the right team. But it's not a magic button, and it's definitely not always the cheapest or easiest option. You've got the risk of starting upside down with zero down, plus the funding fee, the hidden cost of no PMI that's really just packaged differently, the wildcard VA appraisal process that can derail timeline and values, the perception problem with some sellers and agents in multiple offer situations, and the simple fact that VA isn't the best fit for every property or long-term plan. None of this means you shouldn't use your VA loan. It just means you should use it intentionally with your eyes wide open. My mortgage team is licensed in almost every state, and we've built connections with VA savvy realtors all across the country. So even if you're not buying here in Kansas City, we can still help you with financing and connect you with an agent who actually understands how VA offers the right way in your market. If you want someone who understands the military side, the real estate side, the mortgage side to walk you through your options, that's literally why I do what I do. Call or text me, numbers in the description, and let's talk about your goals, your timeline, and whether a VA, conventional, or hybrid strategy is the smartest move for your family, no matter where in the country you're headed. See you next time.